Foss Swing and Day Trade LLC. Uh, Disclaimer, this is for entertainment purposes only, educational purposes, but uh, there's no intent to advise anyone regarding trading in this market. Please go to fossswingtrade.com to my website to see the full disclaimer. I am not trying to provide any advice for anyone regarding trading futures. You trade futures at your own risk. You can certainly lose money trading futures. There's risk and risk of loss of capital. You can lose your entire account trading futures. So I present this to you for entertainment so that you are able to follow someone who is actively trading in the futures market, who's not a professional trader, just kind of self-taught, and I have been trading for years, just in my spare time. And today it's Tuesday, and we traded in the S&P 500. This is the S&P 500 mini contracts. It's not the micro contracts. It's the mini contracts. And I will try to show you some of the trades that I made today. I'm having a little trouble with my angle here. Let me see if I can adjust this. Okay. Let's see if I can get a little better look. Well, I think I may have to just hold this on my own. Okay, so today was a sorry about that, a little technical difficulty. Problems with the Joby. All right, let me just cut that off. All right, so we're back to the S&P 500 mini futures, and again, these are not the micro contracts. So one contract can have an impact on your account, and you can see this was pre-market. This was early, so 5:30 a.m. between 6 and 6:30 a.m. Chicago time. So that's actually 7. It was right around 7 a.m. East Coast time when I started placing trades on the S&P 500. We were kind of trending down. Let me go back a little bit further so you can see what had happened. So we had reached a peak here, and this was, of course, this was Tuesday morning. So Monday, the indices had pretty much hit all-time highs in all the indices, I believe. And so I was expecting some kind of pullback, which we got. The question is, how much of a pullback we're going to get. So we pulled back, and it looked like we were kind of just there was no tell in terms of how far back we were going to go. There was no volatility spikes, to raise any concern for a big market correction. It was just this slow drift down, and I wanted to get in before the market opened, because I know that a lot of times when we're hitting all-time highs, the expectation is for a pullback, and the market just does just the opposite, and it stays strong for a while. So I wanted to get in. So I bought one contract here during this kind of slow drift down, and I held on to that one contract, thinking that we would probably rise, start turning higher as we got close to market opening, and it looked like we were going to do that. And you can see these. We started getting some green candles or bull candles here, and we went all the way up to the 200-day moving average, the red line. So you had a lot of things going on here. You had the 50-day moving average, the yellow line, crossing over the 200-day moving average, the red line, and we touched that 200-day moving average, and then we pulled back, and then we got some big candles down, and then a little volatility. So at this point, I only had one contract. So when we pulled back here, we got this big candle down here, I bought a second contract, and I took a quick profit on that because I was concerned that we would, probably get more pullback, and especially when this candle initially went up, and then that a big wick was forming. So I just said, let me get out, and I'll get back in if we go lower. And we went lower, and I got in, but there was some slippage, and I got in at a worse price than I was expecting. I think we were down here somewhere in it, but my fill price was here because I placed a market order rather than a limit order. I'm starting to place limit orders, or like buy at ask, or sell at ask. At least when I sell now, a lot of times I'll choose sell at ask rather than just sell at the market, because there's so much slippage, and I'll try to get a better price that way, especially when I'm making these small profits, because every little tick counts when you're doing a lot of scalp trading. And so anyway, I had two contracts at this point, and we kept going down, and this next candle down, I bought a third contract, and that's where I drew the line. I said, I told myself, no more contracts until this thing rebounds. You get it wrong the first time, you lose money. Get it wrong the second time, you lose more money. Get it wrong the third time, then the money you're losing starts to really hurt. And of course, we kept going down, and by now, I was down quite a bit, 3 contracts in. But then it looked like a nice little bottom formed here. You got the little wick here, and then you got the engulfing bull candle here, followed by more bull candles. But then, it didn't really follow up that well. We kind of drifted. We got a little bit of lift here, and this was encouraging because, then you're getting lower lows, but the highs weren't all that great. You got a little bit higher high here. So that was encouraging. So I just held those 3 contracts, and I was determined to make a profit on this trade. So I held 3 contracts, and right here, as I bought those 3 contracts, my overall average cost came down, of course. Um, but I was looking at the individual contracts that I purchased, and that third contract I had, as you can see, purchased at $4,109.75, and when we finally started moving higher, you can see that I sold it at a profit at 4,111 even. And then we kind of got in this area of consolidation, and then we got the big candle up, and I sold this probably wasn't the best idea, but I sold the second contract here. At the time I had no idea the candle was going to be that strong. It just went up, up and away. But I figured that, you know, this big wick, um, this big wick here, I mean, that made for quite a hammer. That's a nice hammer candle. But then you had a little doji, and then this big move up, and I was thinking that that was a possibility that we could get a big move up and really start closing the gap for the market opening, because at this time it was 8:30 Eastern time, just after 8:30, and I believe some economic news came out, a CPI data, and something that caused a good reaction in the market. But the way I saw it, because sometimes good news is bad news, bad news is good news. News can be unpredictable in terms of the market response. So, I figured there was going to be a big move. Anytime you're talking about CPI, um, you know, numbers like that, you're going to get some kind of reaction in the market. But it could be either up or down. And so I didn't want to be in a situation where had a head fake up and then turned down. And I'd rather only have one contract if we took a dive here. And since we just came off of all-time highs, the dive could be pretty deep. So I went ahead and sold that second contract. I figured if the market reacts good to this news, then one contract will get me back to break even or higher. And that's what happened. We got the big candle up here. We had a little consolidation here, and then we got up and away, and I sold out here. So by the time I sold that, I was in profit land. So I was out of those contracts at that point, and we went higher, and then kind of consolidated. And so we went higher. We peaked up here, got some topping tails, these dojis, and then the red candle suggesting the change in direction. So we were headed back to the 50-day moving average, and then the 20-day crossed over the 50, and I started buying contracts as the market opened. Market was open at this point. Let's see. Yeah, we were well into no, the market had just opened. So the market opened here. market. We try to line this up. Okay, the market opened here. And so shortly after the market opened, I wanted in. It looked like we were headed back towards that 50-day moving average. So I bought a contract, and we touched the 50-day moving average. I sold that contract for a quick scalp trade. And of course, with slippage, I barely made a profit on that. And then we pulled back. We got the big red candle down. So it gave me an opportunity to get back in the market. So I bought a contract. We went down more. Then we started climbing. Then we got a nice move higher here, and I was able to sell the contract that I purchased here at this price up here. So I bought it $4,118.75 and sold at $4,121.75. And so that was a nice profit. All right, so we peaked up here, and then we had a nice little pullback here. And I was all in scalp mode here, and I bought a contract here. Bought a contract here at 4123.25. Sold at 4123.75. And then I made another little scalp trade here. Bought at 124.5. Sold at 125 for a small scalp trade there. So all winners so far. And we peaked right here. We came back down, and I made another scalp trade. But this time I bought 5 contracts at 123.25. And then I sold. Then I legged out of those 5 contracts one at a time. Sold at a 4,123.5 for minimal profit. Sold a second one at the same price. Third one at 123.75. And then the last 2 I sold at these higher prices, for 123.75 and for let's see. And then the last one was at a higher price. I can't read the number. So I was all out at that point. We peak up here, and then we get a nice little pullback here. Not sure why I didn't jump in. I may have been dabbling in another indice. But we got more pullback here, and we were down to 4,122.5, where I made another purchase. We did go up, but I was more interested in a longer term hold after purchasing this contract. So I held on. We pulled back, and then I ended up scalping out at at a slightly higher price at 122.75. So that was a minimal profit on that. I got a little impatient. We went higher, went significantly higher after that. And I kind of missed out on all that. And we finally peaked. You can see the shooting star kind of suggesting that we were at a top. And there was going to be a change in direction, which there was. We pulled back, and I bought at 134.75. And we had more pullback. I held this one for quite a while. I think this is when I took my family out to eat. And boy, I think the bill was like $200 for a family of 5. And we drank water. We drank water, ate at a little vegan restaurant, vegetarian restaurant. $200 for a family of 5. I mean, somewhere in that ballpark. I mean, the prices are high these days. And it's nice to have a little side hustle in case you need a little extra coin in pocket. Okay, so this was all happening while I was out of sight. Come back from dinner. And it's now late at night. And the market was down, but did finally turn around. And we got some big moves higher. And you can see we just kept going higher and higher. And that's where I sold that last contract at 4137.25. So I was pretty impressed with that sale because that was right at the top. That's selling at the top. And what happened after that? We go down, and I'm at this point I'm flat. I'm completely out. But we went down so quickly, and I was so impressed with getting out right at the top that I decided to go ahead and take advantage of that and get back in just in case we go up again. So I could say that I rode it up. And so far, so good. We've risen higher, and I'm already up $100. And there we are, right at this moment. It's 2 a.m. on the East Coast, and I've got a profit. So I'm up $87.50 for tonight. And overall, the portfolio, the account continues to grow in size. We're now at $54,022.98. You can see I took that profit of 125. And I got a margin of 400 that reflects the contract that I have in the S&P 500, the mini contract. If it was a micro mini contract for the S&P 500, that total margin for one contract would be $50. So it's 400 because it's a mini contract, not a micro contract. So there you have it. I'm at 54.22.98. Now that, remember, this account, was under 30,000 just in February. At one point in February, it had touched below 30,000. So we're now at 54,000 $22.98, and we're just in the middle of April. So, so an account can grow substantially trading futures, but it can go the other way. Don't get me wrong. And so you need to do your homework. You need to practice trading, or, like I said, I don't like doing simulated trades, but until you get used to the platforms that you're working with, till you get used to putting in orders, and if you're going to use stop orders, and however you plan to trade, you got to be familiar with your platform, and using a simulated account is probably reasonable for learning all that. But the only thing different from simulated account and real money is the psychological impact that trading real money has on you. Now, and that's going to vary from person to person. Everyone's situation is different. Some people, will look at, well, 54,000 in an account is nothing. I'm a multi millionaire. You know, this I don't this is nothing. And so if they're trading an account like this, it may not phase them psychologically because it's such a small amount of money to them. On the other hand, if 54,000 is your life savings, it's going to have a huge impact on you, to see your account go from 54,000 to maybe 48,000, because of an unexpected move in the market, and you made maybe a bad decision on purchasing some contracts. So you the real money situation will be different for everyone who trades. It's going to have a different impact. We're all made differently, and we're all in different situations financially. So you have to, um, it's best to start small. Not necessarily have a small account, but um, once you open your account and fund it, then make small trades, so that you get a feel for how um, losing trades are going to impact you. Most people don't have a problem with the winning with the winning trades. When you're making money, you get a good feeling and you want that to continue. But it's when you start losing. I mean, you're going to have losing trades if you if you trade frequently at all. You're going to have losing trades. Um, you probably There are going to be times when you seem like every trade you make is a loser. So it's going to happen. You're going to have drawbacks in your account. Your account's going to take hits, and you have to know how you're going to handle that psychologically, because that's the biggest part of this game is the psychological component. How you can handle those losses, how you know how are you going to manage? Are you going to use stops? Or are you going to have mental stops and just get out when you know when your limit's reached? Um, are you going to leg out? What I like to do, and that's why I like trading the micro contracts, because that allows you to purchase a lot more contracts for a lower price, and then you can leg out of positions. That way, if you get to a profit, but you really want more, but you don't want to lose the getting some profit out of the trade you made. So if you have 10 mini micro contracts, you can maybe sell 2 or 3 of those contracts, still have 7 contracts in case the trade continues to go in your favor, and at the same time you've taken some profits just in case the direction of the market changes unexpectedly. So so that's kind of where we are. And just during that short period of time, we've had a little pullback. So my profit for that trade is now already down to $37. But Um, I'm comfortable holding that one contract, and I'll just hold on to that until tomorrow. Um, Even if we have a deep pullback, you know, it's not going to do so much damage. Um, so I rather have a little bit of skin in the game than to be completely flat. Um, so unless something unexpectedly happens tonight, I'll just try to get some sleep and be ready for the uh, regular stock market hours, 9:30 a.m. On the East Coast. Okay, happy trading.